Click Add Studies, go down to Trend Reversal, and I like to make these white because it stands out against a black background. And when these show up on your chart, you can look for trades in the opposite direction. You can see here, the market reversed up, the market went up too much. This showed the market is likely to reverse, and it did. This one here, the market went up a little bit before the trend continued down. And there's a lot of ways to trade with this. One, if you're a conservative trader, you can just simply draw a trend line underneath the lows, and when price finally breaks down underneath that, then look for your short. And that way, when these are wrong and the market continues up, you either get in to the counter trend trade at a much better price, or you avoid the trade altogether and avoid a loss in a lot of cases, not always. In this case, the market was coming down. You could have drew a trend line over those highs of that bar, and then price broke out right here, you went long. And the market only went up about 25 pips before continuing down. Another thing you can do is whenever you see a counter trend signal, draw your fibs from the last high down to here. And oftentimes, especially in the currency, the euro dollar, where the weekly and monthly trend is up, if it does go down, it's likely to stall out down here at the Fibonacci profit targets. And having made a significant move before where our trend reversal signal shows up, it's even more likely, in our opinion, to find support at either the 1.382 or 1.618 Fibonacci profit target. Let's look at some other currencies. The Australian dollar, you can see the price reversed a little bit here. It went a little bit lower, then it reversed more radically. And you can see this was a little bit early, but the price soon stopped going up and started going down. This example right here is obviously wrong. The market was very weak at the time, and it continued down. However, remember, if you draw your fibs, the market's very likely to reverse here, which it did, and it went a little bit below the 1.618 fib target and then reversed. Did a pretty good job of showing the likely high here. The market reversed about 25 pips, and then a little bit again at that double top. This works on all time frame charts. The longer the time frame, the more pips typically the reversals bring about. Let's look at some other examples first before I go to longer time frame charts. Here's the pound dollar. You can see did a good job here, here, here. This was a little bit early by about an hour, and the market reversed. Market reversed. This was a little bit early. The market did reverse a little bit, but you can see the price really didn't make a significantly higher high. The triangles are a more severe form of being overbought or oversold, and thus you will find, and it's our opinion, that when you see a triangle, usually that's the end of the move, and you really want to start aggressively looking for counter trend moves. Here's the dollar Swiss, reversed a little bit. The triangle, again, oftentimes signals the beginning of a nice trend in the opposite direction. This one here worked. This one did a pretty good job of nailing the low within 15 minutes, and this one stopped the up move. So you'll find this has a tremendous impact on your trading and can be used in many ways as either a counter trend entry signal. It can be used as a form of exit. If you're already in a trade and you see one of these counter trend signals show up, let's say you were short right here and you saw this. Any signs of this not going lower after you see that signal, you might want to get out of your short. I think you'll find most times that will allow you to exit with more pips than waiting. Here's the euro yen. Notice the trend reversal signals here, here. Again, it doesn't always reverse and explode the other way. Sometimes the market, goes sideways for a while, and other times it only goes up 20, 30 pips like this. And other times, you can see, again, the triangle oftentimes is the ultimate low, and the price went up afterwards. Here you see a trend reversal signal, and the market continued up for a few more minutes, and it's starting to go down right now as we speak, as you saw in real time. These trend reversal signals, are a wonderful way of letting you know when the price is likely to either stall and go sideways or soon reverse. Like I said earlier, this works on all time frame charts. Some of our traders use this on 5-minute charts. Some use it on 30, 60, 240. You can see here the price reversed about 30 pips. The triangle usually is the end of the move, and this price continued on up a little bit higher and then exploded down. You can see the price stalled here, stalled here. This was a little bit early, but the price stalled and reversed. This one here stalled the price for about 2 hours. This one here did a good job of showing you the low. This one here pretty much failed. Again, like any tool that exists, there will be times where it works and times where it doesn't work. And you have to use this in conjunction with the other tools. Our real-time statistical trend tools, if the market's falling and our real-time statistical trend tools are showing extreme weakness, then the reversal counter trend signal is less likely to work, obviously. If the price falls with very little statistical weakness, then in our opinion it's more likely to reverse and go up. Right here, for example, if this market was extremely weak in real time, then this signal is less likely to provide a reversal. But it doesn't mean that you can't look for counter trend trades. Wait for the market to kind of stall like it did right here and take a stab at buying, and if it doesn't work, draw your fibs on this move here and look to get back in somewhere down here at the Fibonacci profit target. Because you have a counter trend signal before, Fibonacci profit targets, in our opinion, are even more likely to be the ultimate low of that particular move. You see the same thing here, counter trend signal. Draw your fibs on here. Look, almost to the exact pip, the market stalled, and there was a pretty decent move the opposite direction. Let's look at some other time frame charts. Let's go back to the euro dollar on the 30-minute. You can see here the triangle, end of the move, the market continued down. This one was a little bit early. Obviously the market stalled there, but then continued down. This one here, the market stalled. And that's what typically happens. Either you get a reversal or you don't. But when you don't get a reversal, typically the market goes sideways. This one here did a good job. This one here did a good job. And obviously, if you take a counter trend buy signal and the longer term trend is up, like we all know the euro dollar is right now, then the buy signals are more likely to work than the sell signals. Right here, right here. This one here obviously didn't work. But you got a nice 100 pip move off of this one. You got a nice 100 pip move off of this one. And when they don't work, you exit with a 10, 12, or 15 pip stop. Let's look at it on the 240-minute chart. You can see reversal. The market kind of went sideways. This one nailed the low, the triangle again. This one nailed the low. This one nailed the high. The market pulled back about 100 pips. This one here failed. Here in the pound yen, you can see this one did a pretty good job of nailing the high. This one the low, this one the low. Price stalled here. Price kind of stalled and reversed a little bit here. And anytime you see these signals, again, that are a little bit premature and early, you draw your fibs on there and you use the Fibonacci profit targets as areas of getting into those trades. This one here worked. Again, this is the pound yen 240-minute chart. This concludes our tutorial on the trend reversal signal. Remember, the triangles are more powerful